Hi guys, what's up? It's Kelowna here, and today I'm going to show you guys how to take some scalp trades when there is a period of consolidation, choppy price action, or the market's just not moving. I don't like to take scalp trades. I prefer to be in a trade for hours or days to really see the move play out. But here's a few entry and exit points that you guys could use when taking these scalp trades. Now we're looking at the S&P 500. I have my extended session on. We're going to be pulling levels from the pre-market session. So make sure you guys have this on. It should say session, extended trading hours. And yeah, so let's get into it. First, we're going to identify 4 points. All right. The high of the pre-market session, which is at 544.50, and then the low of the pre-market session, which is 538, or the open and close. Or actually, it's not the open and close because in this case it is, but it's the high and the low of the pre-market session. Now let's identify our support and resistance points during this session. We have a clear support over here. That's not super clear, but somewhat at this 540 mark. Yeah, we'll just call it 540. I know it's 539.90, whatever, 10 cents off. So 540. And why I say it's a support is because we got to bounce here, here, and here. Now, our resistance point, I'm going to put it a little bit higher than this consolidation area. Why is this a... Hold on, let me make it a little bit cleaner. Now, why would this be a resistance point? Because it got rejected here, and finally able to hold before it breaks out to 544. All right, so now that we have that identified, let me tell you the game strategy. So let's just say SPY is at 541. Once it gets down to 540, or there's a break of 540, we are going to short till about 538. Now there's a huge gap. So if it does end up breaking 540, then you get that move to 538 and possibly fill the gap back down to the previous close of 534. Now, if we break out from 542, then we could expect a move to about 544. And that's how I would take my entries and exits. There's a lot more room to the downside, and there's clear price targets to the downside in this situation. So yeah, that's a trade that I would be looking for because there is a gap, and sellers probably want to push the price down to that gap area. So that would be my game plan, to wait for this break of 540 for a move to 538, after 538, then down to 534. But let's just see what ends up playing out. I'm gonna play the candles a little bit quickly. Okay. So once we got this break of 540, you don't want to enter immediately because since it is a range, it could possibly get some support back here at 540, then head back up to 542 and play this like little ping pong game. So what you're looking for is a clear break, a very strong candlestick. Also, yeah, we're looking at a 1 minute time frame, but let's just look at a 5 minute. 5 minute is going to be easier to tell. So on the 5 minute time frame, obviously some clear support because it's not a solid red candle. Buyers were able to step in around the 540 mark and bring it back up to 540. Well, step in around 539.90 and bring it back up to 540.75. Okay, now let's just go over what we just seen. So we see a break of 542, gets that move near 544, and then comes right back down. Now, I would have taken this trade to the upside if there was a clear candlestick. If we got a candlestick that looks something like this, that happened at 7 a.m., like a really solid candle. But just because I know that it's been choppy, I don't know if I would take it instantly up to this 544 area. Like I said, in this case scenario where we have a gap below, I would be looking for the gap fill. But I digress. Okay, hold on. Now, we see a huge red candlestick breaking this 540 area. Perfect. That's a break of 538, our next price target. What's the next price target after that? 534. Why would you not take that? Hold on. Something very important happens at 534. Buyers step in, bring it back up to this 535. Anytime you get one of those hammer candlesticks, it shows that there's some sort of strength down here. But let's see how it plays out. It's teetering at this 200 SMA, continuously getting rejected, but it might get some sort of support. Why I say that it keeps getting rejected? Because buyers move the price from 535.50 all the way up to 539.28 in 5 minutes, $4 move. So, and then it sold off and ended up closing at 536. Shouldn't that be a clear sign of weakness? Whatever. I mean, I wouldn't have taken a trade based off this one candlestick. I'm just stating, to me, it looks like a clear sign of weakness from here. And I would have thought that it would have went down a little bit lower. But somehow it gets some support, comes back up to 539. Once it gets to 539, you would look for some sort of rejection or if it's going to break through 539. Instead, comes back up, starts trading back in this range. Hold on, let me pause it. Okay, gets rejected from 542 and then ultimately another break of 539. And then here is the extended hours. Now, as you guys can see, our pre-market levels held up and used, I don't want to say they held up because obviously it broke support. So they were consistent throughout the trading day and you were able to take trades based off these points that you got from the morning session. That's why it's very important to, pull out your levels from the pre-market session so you could use them as, daily levels. Also, confluencing with your higher time frame support and resistance lines and supply and demand zones. Anyways, that's how I would scalp trade. I mean, I feel like that was really well explained. But if you guys have any questions, then don't hesitate to comment them down below. Anyways, have a wonderful trading week. Bye.